home prices may soon fall off a cliff, similar to what happened during the crash in 2008.
As a lack of affordability curbs demand.
Uniquely volatile market. Two sets of buyers came in 3 hours after dropping sharply in January.
Since November has been all over the place and where they believe mortgage rates will go.
Are we on the brink of the worst housing meltdown in recent American history? While the evidence suggests that we could be, the current housing market has not yet crashed. The stats show no significant changes, but what's happening on the ground tells a different story. Back in March 2020, the world was hit by a pandemic that shook everything in the economy, including real estate. But from March 2020 to June 2022, the median home price went up by an unbelievable 43%, as measured by the Case-Shiller Index. Investors rejoiced as they cashed in on millions during this super growth era, while owners celebrated by pulling out record-high equity. But buyers grew desperate watching as month after month prices just got worse and worse. After 27 straight months of near parabolic growth, the market finally took a breath in June 2022. Since then, the Case-Shiller Index has declined for 5 straight months, falling 3.6% from the peak. Although this may seem like nothing compared to the historic gains, it's the beginning of something big. This tiny blip on the graph is extremely significant because it's showing that something has changed in the markets. The evidence for this can be found in shocking new data that is being updated every single week. For example, the newest Case-Shiller release reveals that prices have now declined for 5 straight months. If we trace history, we can see that this type of decline rarely happens. In fact, since 1986, the market has almost never dropped more than 3%, except in 2008, and a small 3.05% drop in 1990. While this may seem like no big deal, it's mounting evidence that this is the start of another housing depression similar to the one seen in 2008. The evidence suggests that we are in what they call the denial phase of the crash. You have a lot of people who are private sellers refusing to budge on prices and maintaining the illusion of a market. However, in reality, builders, who are multi-billion-dollar corporations, are the group that moves prices in most markets. They have whole teams dedicated to setting prices and understand demand and supply better than anyone else. The most recent earnings reports from builders reveal some pretty serious issues within the market. Builders are slowing down, slashing prices, and increasing incentives. While the effects of these actions will take some time to move into the existing home market, it's undeniable that these developments in the new home space will have an effect. Real estate crashes take a really long time to get rolling, and they don't happen overnight. The last crash took 10 years and 6 months from start to finish. We're at a crossroads, and the American dream of owning a home is under threat by simple math. Home affordability has become a significant issue, with the median American who bought a home in 2022 paying over 52% of their gross before-tax income on the mortgage. Given current income levels, prices, and interest rates, it's become unaffordable to own a home. If we look at history, incomes are unlikely to rise to catch up to these other variables, and interest rates are going to stay elevated. That leaves only one variable left: prices. As the market enters a long, painful bear market that will play out in the coming years, starting with the builders, it's crucial to keep an eye on your local market. Are you seeing evidence of a slowdown? Are builders offering incentives? Leave a comment below and let us know what you're seeing. So, while the housing market has not yet crashed, the evidence suggests that we could be on the brink of a significant housing meltdown in the near future. The signs are there, and it's up to us to stay informed and prepared. It's important to note that a housing market crash isn't all doom and gloom. It can offer opportunities for buyers and investors to get great deals on properties that they may not have been able to afford before. However, for those who are already struggling with their mortgage payments, a market crash could be devastating. In conclusion, while the housing market hasn't yet crashed, the evidence suggests that we could be headed towards a significant downturn. It's important to stay informed about the latest developments in the market and keep an eye on your local market for signs of a slowdown. Let's stay prepared and make the best of whatever the market brings. Thanks for watching, and don't forget to hit the like and subscribe button for more informative videos like this.